Welcome. This is another practice problem for statement of cash flows. Statement of cash flows can be very tricky. I think I've mentioned that, especially in real life, it's very tricky. So I want you to get lots of practice. I want you to do all the practice ones out there. I wanted to give you a little extra guided practice, but also make sure you can do this on your own. So we're going to start with this Lomax company one. And there's going to be a few times in this video I tell you to pause it and do some work. Please do that, otherwise you may not get the full value out of it. And ignore these numbers up here. This is from a different textbook. I just liked the problem. So we're going to start with Lomax company, and the first thing we need to do is find the changes. So this is where I want you to pause it, because you're going to find the changes, fill them in all the way down, and then come back to the video. So I'm assuming you're pausing. And here we are with the changes. So you're all back, you've gotten these same changes, and we have to think through what these mean. So our change in cash goes straight onto the cash flow statement, so I'm not going to think about that one too much. And then we have these changes in current assets, and those all go in operating. But then this is an increase in accounts receivable, so it needs to go in as a negative. The decrease in inventory needs to go in as a positive, and the increase in prepaids needs to go in as a negative. Now we're going to skip some of the hard things and go down here to the current liabilities, because those go in operating too. The only thing that would be different, and one of our practice problems had that, is if there were short-term notes payable. Those don't go in operating, but all the other current liability changes do. So we have operating, operating, operating. This increase in accounts payable goes in as a positive. The decrease in accrued liabilities goes in as a negative, and increase in income taxes payable goes in as a positive. Okay, so we've kind of done the easy ones, and then we have to scoot down here. You know what I mean? I'll see it all. We'll deal with it. And we have to read some of this stuff. So the first thing we're going to talk about or look at is property, plant, and equipment, just because I'm going straight down the balance sheet. And we have to go down to a year for $70,000.
Remember that $70,000 is our proceeds. That goes in investing. It's the cash we got for the sale of the equipment, and it goes in as a positive. And then they tell us the equipment had a cost of $130,000 and $40,000 in accumulated depreciation. Well, since I'm going to have to move my paper around while I'm here, we're going to figure out if there was a gain or a loss on it. So first we're going to say, well, what was the net book value? How do we find that? We need to take this cost of $130,000 minus our $40,000, and that gives us $90,000. I'll put that in parentheses. The $130,000 minus $40,000. All right, sorry, my keyboard's in the way. I gotta make a move here. Okay, that's our net book value. Then our proceeds, we just said, are $70,000. So in this case, we've got $90,000 on our books. We only got $70,000 in proceeds. We have a loss of that difference of $20,000 because we didn't get as much as we had recorded on our books. And remember, gains and losses, even though it seems strange, always go into operating, and you have to kind of think opposite. A loss is going to go in as a positive. Okay, now we're going to take this information we know with the sale that had a cost of $130,000, an accumulated depreciation of $40,000, and we're going to come up here and we're going to draw our T accounts. So let's start with property, plant, and equipment. We'll draw a little T account. Our beginning balance is $2.6 million. Remember, that's a debit. Our ending balance is $3.17. They told us we had a cost of $130,000 of that piece that we sold. But right now this doesn't roll. So we need to figure out what was this amount, and that would be our purchase. So we take this 3.17 minus the 2.6 plus 130,000, and we get 700,000 here. That's how much we purchased. Now those cash purchases are going to go in investing,
And if we purchase something, we paid cash out, so it's going as a negative. Now, kind of like what we did on the roll forward in Excel, you can do maybe a shortcut calculation if you'd like to, where you know this change is $570,000. And we know the sale, if we add this sale that we got rid of 130, that gives us our purchase of 700. I just want to show you both ways. This is a much better conceptual view, but if this is easier for you, by all means do it. Okay, so we've got property, plant, and equipment rolled forward. We've explained that change. We also need to do accumulated depreciation. So I'm going to do a little T account up here for accumulated depreciation. And what do we have here? Our beginning balance is $755,000, and remember that's a credit, it's a contra asset. And our ending balance is $810,000. Back down here, you can't see it, but you're all going to look down on your page on letter C. It told us they had $40,000 in accumulated depreciation. So we'll put that over here for that item that was sold. And again, this doesn't roll right now. We have to figure out what to plug in here, and that plug is our depreciation expense. Because each period we debit depreciation expense, credit accumulated depreciation. So if we take this 810 minus 755 plus 40, we get 90,000 for depreciation expense. And remember, depreciation expense is our first line after net income on our statement of cash flows, and it goes in operating and always as a positive. Just like below, you could also do kind of a shortcut here where you said, all right, our change was, what did they say, 55,000 plus our sale was 40,000. Therefore, our depreciation is 90,000. Oops. 95. Look at me. Sorry, guys. Make sure this is 95. It's getting carried away. 95,000. Let's say I would have plugged 90,000 in there. When we went to the cash flow statement, we put everything in. Would it work? Nope. At the end, I would figure out I was wrong and I'd have to go check. So now we've accounted
for the change in PP&E, accumulated depreciation. Okay, long-term investments. What do we know about those? We're going to scroll down here, and they tell us long-term investments were sold during the year for $110,000. These investments had a cost of $50,000. So if we look up here, that change, that $50,000 is the cost. Okay, so we don't need to do anything extra. We don't need to draw a T account. I'm good with that. What we do need to make sure we know is this $110,000 of proceeds goes in investing. And it's proceeds, so it's a positive. Then, well, I've got enough room here. Let's make sure you guys can see it though. We look here and we say, okay, for these investments, they had a cost of $50,000. We have proceeds of $110,000. Therefore, that difference of $60,000 is what? It's a gain, because we got more than our cost. So we had a loss up here. We have a gain on the sale of investments. That's going into operating, but the gain goes in as a negative. Okay, so we've explained, where is it? That 50,000 change. We've got these two pieces that are going to go in our statement of cash flows. Then it says loans to subsidiaries. We have a change of 44 right there. And if we come down here to letter E, it says the subsidiaries did not repay any outstanding loans during the year. Therefore, this whole 44 increase must be additional loans. So this is going to go into investing, and it's a negative because we've loaned out money. All right, next up, bonds payable. Here we go, letter B. It says bonds payable with a principal balance of $350,000 were repaid. Okay, now that's
It didn't just go down by 350, so we've got to do a T account, do some calculations. We'll come over here and we will do, this is bonds payable. Our beginning balance is $600,000. Our ending balance is $820,000. All right, it says $350,000 were repaid. So we're going to debit that to reduce it. You can put repaid or retired. And this retirement is going into financing as a negative, because when we retire bonds, we pay out that money. Then we don't know anything else, but we know this doesn't roll. So we've got to figure out what is this. And these are new bonds we've issued. So we take the 820 minus the 600 plus the 350, we get 570,000. So those are what we've issued. When we issue, that goes into financing, and it's a positive because we got cash for that. And just like on the other ones, if we want to do the little shortcut, we could say our change here was 220,000. We can add the retirement of 350. That gets us, let's make sure I add right this time, 570, right? Okay, yes, that 570 ties here. Okay, good. So now we've accounted for this change. Common stock went up by 90,000. If we come down here, it says Lomax did not repurchase any of its own stock during the year. Okay, so the only change would be that we issued stock. That goes into financing. If we issue stock, we get money in, so that's a positive. All right, our last thing is we need to think about retained earnings. And I'm a little short on room here. We'll make it work. All right, our retained earnings has a beginning balance of 478,000. Has an ending balance of 573. And then we have to think, what impacts retained earnings? Well, the very first thing that does is net income, increases it. So we're going to hop over here. Where is our net income? Here it is, 170,000. So we need this number. Now, because you know I like you to know how to do these calculations. We did that gain and loss. We calculated those on the other page. This is where they're shown on this particular income statement. So we can double check. Those match ours. Just like most companies, depreciation is not its own line. I think it was on the very first sample problem, but that's extremely uncommon. So you do need to know to do that calculation. Gains and losses are more likely to be shown, but sometimes they're all put together, so we wouldn't know them. But we checked those. We're taking this 170,000 of net income. Coming back over here in a second. All right, so we've got 170,000 of net income. And remember, net income is how we start our operating section, and it's a positive. But this doesn't roll. We need something over here. And those, where it says the company declared and paid a cash dividend, that's what this is. So we take our 573 minus 170 minus 478, and we get $75,000. That's our dividend. And those cash dividend payments go in financing, and they go as a negative. So this is very busy here. Let's see if I can make some boxes. Okay. Okay, because I'm going to continue with this one right here. Because if we want to do that thing where we look at the change, we said, okay, we have a change of 195,000. And this time we have to say minus net income of 170. Gives us our dividend of 75,000. So same end result, whichever way is easier for you to calculate that. All right, now we have everything. I'm going to stop this video and I'll come back and do the solution in a separate video. But I want you to take this and go to your blank piece of paper and put together